This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Strike threat. The United Auto Workers Union tells Fiat Chrysler that 40,000 workers are ready to walk off the job.
Harsh reality for fantasy sports, the controversy that's engulfing a very new, very big, and very fast-growing industry.
Warming up, why cranking the heat up when the temperatures drop may not cost you as much this winter. Great news for my wife. All that and more tonight. She's always cold on Nightly Business Report for Tuesday, October 6th.
All right. Good evening, everybody, and welcome. Preparing to strike. That's what the United Auto Workers Union told Fiat Chrysler its 40,000 members were ready to do, perhaps as soon as Thursday morning. The union said tomorrow will be the last day its members work on a day-to-day contract. A clear sign that talks to reach a new labor deal have broken down. Phil LeBeau has more on the main sticking points and what a strike could mean for Fiat Chrysler.
For the first time in 8 years, the UAW is ready to strike a Big Three auto plant. The union has told Fiat Chrysler its members will walk off the job starting Thursday morning unless something changes in the stalled talks to get a new labor contract. Fiat Chrysler and the UAW are not close to reaching an agreement. Just last week, 2/3 of the union members rejected a tentative contract, partially because there is still a sizable wage gap between lower-paid Tier 2 workers hired in the last 6 years and those higher-paid workers who have been at Chrysler far longer. The auto workers feel they should get more money because Fiat Chrysler is rolling up sizable profits thanks to strong sales of Jeep SUVs and Ram pickups. While Fiat Chrysler is no longer on the verge of bankruptcy, it is the least profitable of the Big Three, and a strike would be felt almost immediately by the company and its dealers. Right now, there is a limited supply of certain Jeep models, and that could dwindle quickly if there is a UAW strike that stops production of Jeeps. As for Fiat Chrysler, by one estimate, a week-long strike by the United Auto Workers would cost the company over $1 billion in revenue. Phil LeBeau, Nightly Business Report, Chicago.
Well, from a possible labor strike in the auto industry to a potential scandal in a burgeoning one, fantasy sports. DraftKings and FanDuel are the two biggest players in this fast-growing multi-billion-dollar business. And just like other new economy companies such as Uber and Airbnb that operate in regulatory gray areas, DraftKings and FanDuel have seen big money flow into their sites at a very rapid pace. But today, the sports gaming outfits faced fire after the New York Times said an employee of DraftKings accidentally leaked proprietary information to the public the same week he won a fantasy contest on a rival site. And that is raising a lot of questions about the integrity of the industry.
The scandal, if that's what it turns out to be, is being compared to insider trading. And it's an apt comparison except for one thing. Unlike in the investment markets, no rules, laws, or regulations govern sports fantasy gaming.
Is it insider trading? Maybe not in the legal sense, but insiders are gaining or have access to information that could presumably give them an unfair advantage over the consuming public. And too many insiders are playing fantasy sports to take at face value any statement that nobody is utilizing inside information to win.
Until today, when both sites issued statements banning their employees from doing so. It's been common practice for employees to play on rival sites. In fantasy sports, fans choose real players to create their fantasy teams. Statistics compiled by the real players during games are then totaled to see whose fantasy team is best. It might be an advantage if someone knows how often certain real players are getting picked. Less popular players can be good value plays because fans who picked that player have fewer rival gamers to beat, raising their odds of winning. That is, if the player performs well on the field. And there's a lot at stake for these companies. Daily and weekly payouts, instead of waiting for a full season to play out, are attracting customers. And how? The Fantasy Sports Trade Association says 57 million people will play online this year, up about 40% from just last year. They'll pay more than $2.5 billion in entry fees, a number expected to top $14 billion in 5 years. Investors such as Fox Sports, NBC Sports Ventures, and Comcast, parent of NBR's producer, have backed these companies with millions, pushing their valuations north of $1 billion apiece. The sites pay the leagues and their teams millions in sponsorship dollars. In some cases, leagues have invested in the sites, though not the NFL, at least not so far. And why shouldn't they? More interest in the games and the players drives up TV ratings. The NFL Players Association even signed a deal to let its players appear in advertising. And those ads are everywhere. Fantasy sports were deemed legal in 2006 through a loophole in a federal law that bans online gambling. That law says fantasy sports are not gambling because they are games of skill rather than games of chance. But the sudden boom in fantasy sports has many lawmakers reconsidering that stance.
Clearly, we're headed towards regulation. We're going to have government regulation like we do in all forms of gambling, such as the lottery, horse racing, casino gambling, sports betting in Nevada. This has been the only form of gambling to fly under the radar, and make no mistake about it, it is gambling and it will be regulated.
So what is Washington likely to do, if anything, when it comes to fantasy sports? Eamon Javers joins us from our nation's capital. He's been following this story. So, Eamon, from what you've learned, what can we expect from lawmakers?
Hi, Sue. Well, I think at the very least, you can expect hearings on Capitol Hill. One, it's a high-profile, a lot of media interest in this issue, and also a lot of fan interest. A lot of people watch sports, and they see these ads for these companies day in and day out, game after game. There are a lot of people who are going to want some answers here. I think Congress is not going to be able to resist the opportunity to have hearings on this. I also think you might see some activity over at the Department of Justice and states' attorney generals generally looking at whether or not there was any fraud here. So I would not be surprised to see some investigations get started here that are a little bit more serious than what we've seen to date. But this is an unregulated industry, and so there really is no one in Washington who's directly responsible for it right now.
That's an interesting point, that the state attorneys general might get in here and look at it for fraud. Is there a partisan divide on this that you can identify? In other words, would Democrats be more likely to go for regulating the industry than Republicans, or is it not really a party dispute?
It's interesting, Tyler. This is not one of those ones that cuts very cleanly by party lines, and so much does in Washington now. Almost everything is partisan here. But this one is tricky. I mean, Republicans generally are more reluctant to have regulations than Democrats, right? So that you wouldn't want to see a big government response here if you are a Republican. That said, there are a lot of fans out there who are concerned, and they want these games to be honest, and they want to be able to be told that they can safely place their bets or participate in these games. So Republicans might be balancing it that way. Democrats might be not wanting to kill the golden goose here, not wanting to over-regulate, although stereotypically that might be their reaction as well. So it doesn't cut as cleanly as some of these other issues.
Very quickly, Eamon, is it more complicated because you have corporate investments in these fantasy leagues?
Yeah, that complicates it. So there are big, powerful interests here, large corporations. The leagues themselves are hugely powerful in Washington. And then also you've got Vegas, the casino industry itself. Remember Harry Reid, the Democrat from Nevada, he's the Senate Democratic leader. The casinos have a sort of tortured relationship with online gaming in general. And whether or not they view this as a partnership opportunity or a threat will dictate how this debate goes in the months to come.
Eamon, thank you very much. Eamon Javers in Washington.
And also in Washington, Amtrak telling lawmakers that it may suspend its national rail service come December. In a letter addressed to the chairman of the Senate Commerce Committee that was reviewed by Reuters, the railroad operator says the majority of its network would be inoperable unless the deadline for implementing certain safety technology is extended. Amtrak says it will have the technology on the heavily traveled Northeast Corridor track by the year-end deadline, but other stretches of Amtrak's track may not be compliant.
On Wall Street, stocks closed mixed. The only index that ended higher was the Dow, which barely held up with help from DuPont. The chemical company got a lift after its CEO announced her resignation late yesterday. By the close, the Dow Jones Industrial Average rose 13 points to 16,790. The Nasdaq dropped 32 points. The S&P 500 was off 7. The biotech sector took a hit, with the Nasdaq Biotech Index falling more than 3.5%. Comes as drug companies continue to come under scrutiny over pricing.
Oil prices, Sue, rose today after the U.S. cut its forecast for output. The Energy Information Administration also raised its 2016 growth forecast for world oil demand. The U.S. is the top consumer of oil. A weak dollar also helps support prices. Domestic crude settled up nearly 5% to finish at $48.53.
As Ty mentioned, winter is coming, and that means people across the country will be turning up the heat in their homes as the temperature drops. But as Jackie DeAngelis reports, this year, it may not be as costly.
If the weather models are right and energy prices stay low, it's going to cost less to stay warm this winter compared to the last two, according to the Energy Information Agency. A combination of more mild temperatures and lower energy prices will be a boon to consumers if conditions hold. The bulk of U.S. homes are heated with natural gas, a commodity that is in abundant supply. Total natural gas stocks are currently more than 15% higher than they were at this time last year. When supply is in good shape, prices come down. Nat gas prices have slipped more than 35% in the last year alone.
Natural gas production in this country hasn't dropped the way crude oil production has dropped. It's actually remained fairly high, and we are a well-supplied market. So it's going to take an extremely cold winter for us to really push natural gas prices higher, and I think most consumers are going to enjoy cheaper energy bills than they had last year.
In fact, on average, natural gas users can expect to pay about $578 to heat their homes this winter, about $65 less than last year. Homes running on heating oil will cost an average of $1,392. That's a savings of about $460. Propane, average cost, $1,437, a savings of $325.
Because of crude oil, overall energy costs are down. Gasoline is down. Heating oil is down. Natural gas is on its own, but it's down because of oversupply. So if we do get a mild winter, consumers are going to save right across the board, no matter what you use to heat your home.
Low oil prices will also bring benefits on the road. The national average for a gallon of regular projected to hit $2 in the month of December. If that happens, it would be the lowest price that we've seen in that month in 7 years. So it could be a very Merry Christmas. For Nightly Business Report, I'm Jackie DeAngelis.
The U.S. trade deficit expanding by the most in 5 months. The gap widened in August, increasing more than 15%. To about $48 billion. This as imports grew and the stronger dollar, along with weaker overseas growth, limited U.S. exports.
And that slowing growth overseas may not improve anytime soon. The International Monetary Fund cut its global economic outlook again to 3.1% this year from its previous forecast of 3.3%. The agency says modest U.S. growth and a slow recovery in the Eurozone have not been enough to offset falling output in emerging markets.
And still ahead, the surprising way the L.A. Dodgers hope to find success off the field long after baseball season is over.
Express Scripts says it will cover those pricey new treatments for high cholesterol. The nation's biggest pharmacy benefits manager will pay for Amgen's drug, as well as the one made by Sanofi and Regeneron, but with conditions. First, it negotiated a discount, and second, the prescriptions will require prior approval from one of its pharmacists.
A ruling from Europe's top court could impact a number of U.S. tech companies. The decision invalidates a 15-year-old agreement that lets American companies handle Europeans' data. Under so-called safe harbor rules, U.S. firms are allowed to transfer personal data of European citizens back to the U.S. This ruling could impact how Facebook, Amazon, Google, and others operate overseas.
Some small tech startups are looking for new sources of capital, and they're finding that funding in some surprising places. Jane Wells has the story from Los Angeles.
While the Dodgers have been winning on the field most of this year, they've been working to win off the field in LA's growing tech startup scene. They become the first professional sports franchise to fund a tech incubator.
We thought we had an opportunity here to get beyond just the business that we have of playing baseball on the field at Dodger Stadium, because our brand extends so far throughout the world.
Dodgers president Stan Kasten teamed up with advertising agency RGA to give 10 startups a total of $120,000 plus office space in LA's so-called Silicon Beach to ramp up their companies. In exchange, the team gets a piece of the action.
It's almost like an R&D project, right? So we have the opportunity to come into the market, understand who's doing what they're working on, what problems they're trying to solve.
Winners include Swish Analytics, a subscription site which provides research for people betting on sports or playing in fantasy leagues. Its next step is to provide research during games.
What is going to be the outcome of the next pitch of the game? What is the expected winner of the game based on the play on an NFL field? Who's the next likely person to score the touchdown, and doing that at a really accurate level.
There's also Appetize, a mobile solution for handling sales transactions at places like Dodger Stadium for everything from buying some peanuts and Cracker Jacks to parking. They'll be testing the system out during this week's playoff games.
So you'll see parking attendants actually going out into the line and transacting at the second, third, and fourth car with one of our handheld mobile point of sale units.
We're a proven, ready-made laboratory. We have 47,000 people a night.
It all comes to a head on November 10th.
We'll have a demo day at Dodger Stadium where all 10 of the companies will present publicly.
And that's when the Dodgers hope to start cashing in and maybe hit a few home runs long after baseball season is over. For Nightly Business Report, Jane Wells, Los Angeles.
PepsiCo reports better than expected results, and that is where we begin tonight's Market Focus. The snacks and beverage giants quarterly, bolstered by stronger sales here in North America. The company's chief financial officer explained the refreshing performance.
The PepsiCo portfolio is working. Previously Europe and Asia, Middle East, Africa were growing more quickly as North America was a bit slower. Now that North America has picked up quite a bit, you see all of the businesses, and North America beverages, Frito-Lay, and even Quaker are all performing really well.
Shares rose more than 1% for PepsiCo today to 97.07. The Bud Miller deal may be unraveling. As we told you last month, Anheuser-Busch offered $100 billion to buy SAB Miller. According to Bloomberg, SAB rejected the bid today because it is seeking a higher offer. Frothier, you might say. Anheuser shares fell 1% to 109.60, and SAB Miller trades overseas. Skyworks Solutions agreeing to buy PMC Sierra in a $2 billion deal. Skyworks, a chip supplier for Apple, and PMC is a software solution developer. Skyworks fell 1.5% to 80.71. PMC Sierra up 33% to $10.24.
FedEx has joined UPS in hiking its fuel surcharges. The announcement comes just before the key holiday shopping season and is the second increase by FedEx this year. It will take effect November 2nd. FedEx shares were 1% higher to $151.51. UPS fell a few cents to $101.43. Disappointing quarterly results from Yum Brands, the parent of Pizza Hut, missed on both the top and the bottom lines and said the pace of recovery in its China division is below expectations. Shares dropped initially in after-hours trading. During the regular session, the stock was a fraction higher to close at 83.42. A weak outlook from Adobe late today. The maker of Photoshop released a weak earnings outlook for fiscal 2016, and shares slid in initial after-hours trading before coming back a bit. During the regular session, the stock was off a fraction to 85.15. And Freeport-McMoRan is considering spinning off its oil and gas unit. The announcement comes just a few weeks after the activist investor Carl Icahn disclosed an 8.5% stake in the mining and energy company. Shares jumped almost 6% to $11.83.
So, do activist investors help or hurt a company, its stock price? And are they bad or good for business? It depends, according to a new Wall Street Journal study that examined what happened at 71 large U.S. companies when activist investors targeted them. David Benoit is a reporter with the Wall Street Journal, and he joins us now to talk more about his findings in a very interesting article today in the paper. David, welcome, number one. Very quickly, what did you do? How did you do it? And what did you find?
So what we did was we took 71 of the largest activist campaigns. We started with the companies worth $5 billion and up, and we dug in. We looked at their total shareholder returns. We looked at earnings. We looked at profit margins, at how much they're spending on capital. And what we determined was, well, about half the time, these companies do really well. They outperform their peers across all those metrics. And the other half of the time, they don't. They miss and just underperform.
So what is a company to do then? Let's say an activist investor like a Carl Icahn, like a Peltz, takes a large stake in your publicly held company. Is there a best strategy? Is there a way to kind of maneuver around that particular situation?
So it really comes down to kind of the nuts and bolts, and that's kind of what I think this half and half shows. Pretty much a company, when they get an investment from like this, has to really stop and think and look at the ideas these activists are presenting and say, well, are they the right thing for us or are they the wrong thing for us? Mm-hmm. And they're going to have to convince their shareholders, whichever way they're going, that they're going the right way after that.
So, David, even though it was sounds like a sort of a 50-50 shot that you did better if you followed the activists, were there some activists who did better than others? In other words, you looked at Ackman, you looked at Icahn, you looked at Dan Loeb. Did somebody have a better performance?
So what we saw kind of generally was that the activists who got on boards and got their own people on boards did the best. And the two that really stand out there are both West Coast names. Value Act, run by Jeff Ubben and Mason Morfitt right now. Mm-hmm. They're doing a lot of kind of big investments. They got on Microsoft's board. They looked very good in our study. And then kind of an older version of that, Relational, run by Ralph Whitworth, has also performed pretty well in our universe of companies.
So there you're following the jockey, I guess, and not necessarily the horse. David, fascinating article today.
Thanks.
Recommended highly. David Benoit with the Wall Street Journal.
Thanks very much.
Coming up, why one small business owner's decision to embrace mobile technology is creating a new financial lifeline for his company. The biggest 500 companies in America hold more than $2 trillion in combined profits overseas to avoid taxes. That's according to a study by two nonprofit groups. The study also found that by keeping money in other countries, the firms are able to avoid paying about $620 billion in U.S. taxes. Apple holds $181 billion offshore, more than any other U.S. company.
Profits on Wall Street rose by nearly a third to more than $11 billion in the first half of this year, according to a report out today by the New York State Comptroller. The move higher marks the street's strongest first half of a year since 2011. Despite the rise, the report also found that the slowing global economy could hurt the industry over the second half of the year.
Mom and pop businesses are embracing change. They're going mobile, adopting new technologies in an effort to avoid getting beat by the competition. In the first of our three-part series, Sharon Epperson introduces us to one entrepreneur who can now go to where his customers are and no longer has to wait for them to come to him.
James Xavier Parisi knows a lot about wine.
Wine had always been a passion of mine, and it's something that I've studied since I was 18 years old.
He also knows a lot about how well his wine is selling, thanks to the analysis he gets through a mobile point-of-sale system.
Point-of-sale system is a combination of your register, customer accounts, what they're buying, and also your inventory levels. It'll start to see where percentage of sales go, and you'll also, I've got, with my newest POS system, it'll actually factor in weather as determinations of what's going on.
The technology helped Parisi figure out an important factor about how to grow his business. He says his wine company needs to be able to meet customers wherever they want to do business.
I've got to expand, I've got to get out there, I've got to get known, I've got to bring my product to the people. So I'll conduct tastings.
So he's hosting tasting events and doing business outside of his store, even on a boat.
You want to make sure that you can take people's currency anywhere they want to do business with you. So it's extremely important that not only your website is mobile ready, but your cash register needs to be mobile ready too.
Parisi agrees his business needs to be able to meet customers wherever they want to do business.
You can get caught up in a moment, and the next day you go, no, it's, you know, oh, that was a really nice time, but, you know, they don't follow through. When they're there, and if you can do that, you know, these cloud-based POS systems allow for you to actually grab that opportunity.
Opportunities like this have helped Xavier Wine Company generate about 30% of its sales outside of the actual store.
We live in an era of instant gratification. Customers want what they want when they want it, and they want it to be as easy as possible. So those small businesses that are going to be the most successful are the ones that truly embrace this and make it as easy as possible using mobile phones, tablets, and other tools to conduct business.
This strategy has given Xavier Wine Company a new buzz.
They don't want to go to a store anymore. If it's not directly in their path of walking, a lot of people won't get out of their way. But if you do, you know, if you bring them a unique enough product, they'll love it when you come to them.
For Nightly Business Report, I'm Sharon Epperson.
Tomorrow, our small business series continues with a husband and wife team who are using technology and social media to modernize their 22-year-old business.
It is interesting how so many businesses are trying to take their businesses
Absolutely.
where customers are, but a lot of others don't.
Can't or won't.
Can't
yeah.
or won't. They're more passive.
That's why we're doing the series, I
Yep.
guess. All right, that's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for watching.
And I'm Tyler Mathisen. Split the difference on the thermostat, folks. Have a great evening, everybody. We'll see you tomorrow.